very good morning, everyone. I hope you guys are doing amazing. It's the very first of July, and I would like to wish everyone a happy new month. I hope you guys had an amazing previous month, and I hope it did go well for everybody. And I hope you're as well ready for the brand new month as well. So, just about a minute or two, wait for a few people to join up, then we can kick off and see what definitely July has in stock for us. So in just about a minute or two, then we can have a look at what July has most definitely prepared for us. All right, so as usual, we're going to start off with our fundamental side of it, just to look at what to expect in the markets. As we all pretty much know, it's the first of the month, and of course, we all know what that means. It means it's the non-farm payrolls week. So all eyes will be on the non-farm payrolls. And do not forget, we have 4th of July this same week, which is the independence for the USA. Unfortunately or unfortunately, it happens to be on a Friday. So we're going to be having our NFP on on another day rather than the normal Friday. So she'll have it on Thursday, other than our normal Friday that we are used to. So we're going to just look at our forex calendar here and see. As you all know, the focus for this week will definitely be non-farm payrolls. But as far as today is concerned, we should pretty much be informed that there are a number of data. There's a number of data that is released in preparation for the non-farm payrolls releases. And some of the data is going to be the JOLTS job openings that we shall have today. So JOLTS job openings basically just shows you how many jobs have been advertised in an economy in the actual month. So we want to see how many jobs were added in the previous month in the American economy. And this can always help us to understand what the employment sector looks like leading up to the non-farm payrolls as well. So we have the jobs job openings today. We have the ISM manufacturing PMI. This basically are the costs that manufacturers are paying in terms of their production cost. If you're producing a commodity, how much are you paying for raw materials? How much are you spending? Because definitely when you're spending more, you're going to charge more when the product is done. So ISM manufacturing becomes more important when it comes towards our CPI and measuring inflation. But as far as this week is concerned, all eyes will be on JOLTS job openings. ISM manufacturing will also be of high impact as well. So it's going to be a tricky one at 5 p.m. There are two major news events coming out at the same time. Looking at the figures here, the previous ISM manufacturing was at 48.5. We expect it to go up to 49.2. We love this being above, being around 50, not above 52.5. That's the range where it's most favorable when it comes to ISM manufacturing. You don't need to go below 47.5. That becomes very negative. That shows some kind of like deflation in simple terms, or deflationary tendencies. So having it going towards 50 is a good sign. Hopefully the actual comes almost to the 50 mark we're looking for. JOLTS job openings last month we did have 7.391 jobs that were added that were advertised, not even added, were advertised in the American economy. So what we're expecting is that there will be a drop in the number of jobs that have been advertised in the American economy from 7.3 million to 7.1 million. So we want to be paying attention to that in regards to the upcoming non-farm payrolls. Then of course we shall have the unemployment rate coming in. Sorry, where is this? Okay. Yeah, we shall have then ISM manufacturing today. Tomorrow is Wednesday. We have no major news event tomorrow, which is okay. That means shall be left to Thursday to see what NFP has to offer us. I didn't see a Wednesday here and I got worried for a minute, but it's quite okay. We don't have any 3-star news event on that day there. Now, today, 5 p.m., we all know there are two news events that will be coming in back to back, all very crucial, all very important. So you want to be able to watch out for that as well. Sorry about that. Let me just do this. All right. So On the other hand, news events may be moving the economy. As we all know, Trump put a pause on his tariffs for 3 months, and that was until 9th July. A 90-day pause on the reciprocal tariffs. So, unfortunately, that time has come to pass, and it's time for us to know what he has to push on next, what deals he has to sign in this week. So, this week we are majorly going to be looking at countries coming in to give trade deals to the USA and things of that sort. And that's what's going to be the major market mover going forward into this week. So let's just see what CNBC has here. If there's anything major that you can look at, some banks say Trump's big beautiful bill will be a bond for the US dollar. Some are fighting Trump's big bill, but that's still at the Senate level. And what will be more important is seeing if they pass the bill. If they don't pass the bill, then the market will be able to react to that. Oh. So now with the fact that the Iran-Israel war has come to bed, I don't expect to see a lot of market volatility, especially on pairs like gold and Euro USD or GBP USD, because basically they have no major reason to try and deleverage or do something of that sort. So on this side, there is nothing big in the news markets. So I think we should just run down to the charts and see what the charts have to offer for us. For now, the markets are just sitting steady. There are the investors are sitting steady and they're just waiting. They're trying to watch out to see who brings in a deal this week, who is off their tables and all that stuff. Then, of course, they're watching the bill as well. So this week will pretty much be a technical week. So you want to just be able to watch that particularly. It's more of a technical week right now. So except for the fact that we have NFP coming up. So with NFP, of course, I will expect some volatility coming in, as well as the Senate that is looking at Trump's big beautiful bill. If the bill comes and it's a very big debt problem, of course, people will look to run to a safe haven because they won't be having the confidence in the US dollar bonds. So we shall see the dollar continue dropping. Right now, the dollar is dropping because it's not looking so good for Trump's big beautiful bill at the Senate hearing as we speak. So I'm going to just share my chart in a minute. All right, just a minute. All right, so this is gold, but we don't start with gold. We start with the dollar index. All right, this is our dollar index, and okay, this is a 1 minute time frame. What are we doing here? All right, so now this is the dollar index on our weekly time, on a daily time frame. So coming in from last week, we saw the dollar drop really so bad. I said if price drops below these levels, it will continue dropping. So it dropped out, came and gave us this quick retest, and then it continued pushing to the downside. So this is the DXY's lowest low ever since I think March 2022. It hasn't been this far, so it's a 3-year low that we are seeing with the dollar index, which is a very bad sign for Trump and his economy, or and his policies as well. So as we speak now, unless otherwise, the dollar is still in a still in a free fall, unless the figures or the data starts showing otherwise. And you can now see why Trump he has put in his bills and the big beautiful bill doesn't look like it's passing through. So the markets are just pricing in what they're expecting, and especially things are not looking good at the Senate. So Trump is his economy is not looking pretty good. The dollar is really dropping and it's really bad. So you can see here we had some kind of like a pennant that our price dropped out of. So if nothing really changes in terms of market sentiment, we would love to see a retracement back to around these areas. You can see the supply level right around that. We do have this supply level, or you could call it a bearish order block that price would have loved to come back to and then drop to the downside. So most definitely a break above this supply level here would mean we are pushing all the way to the upside to the next free supply level. Let's get rid of this in a minute. So a break above this supply level would mean price would want to go all the way to the upside. See, this level has been consumed by this week over here, so price would definitely come all the way to these areas up here. So last time we did have our levels around here, as you can see them. They wanted the price to come back to, I think it was like a 30-minute area that we had refined out. The price came to a retested to the downside, gave us a new supply level right after that, and gave us a new supply level right after that. That price later came to and used to break below the lows that we had over there, or to break below this demand level after giving us this reaction of that particular demand level. So as you can see that now price left us a new supply level here that would either be a next selling zone or a next target for buys. So this would be an area of interest you would love to watch going forward. So let's just see where price currently is. So what we'd love to see here is one of two things: either price retraces back to this supply level, gives us a confirmation, definitely a confirmation on a lower time frame is what you would love to see. Then it can push to the downside, or in case price breaks to the upside, since these areas on the left hand side have been consumed, we'd love to see that move all the way to this upside as well. But that will need very good data or very good information coming out of the Senate Trump's big bill, beautiful big bill hearing as well. So that's the outlooks we'd love to see. But besides that, we can just still see, you can still see the pair continue moving to the downside and to create something like this. It continues moving to the downside and creating new supply levels. Our attention will move to those new supply levels created, because then we expect price to be forming lower lows and lower highs. So this can also happen. Price can just continue moving to the downside and create new breakouts, leaving us with new supply levels that we shall definitely have to focus on based on the current price action. So that's the dollar index. It's nothing so complicated on the dollar index that side. So what else we can watch? All right, so this is the dollar index on this hand. So let's move to the dollar pairs. This is GBP USD. Let me just move up this template. All right, so let's start this from from this side. I would really love to see the weekly time frame when it comes to GBP USD. So we can see very bullish, very bullish. Price to give a breakout from this area, coming down to the daily. We're still pretty bullish. Remember, this pair is inversely correlated to the DXY or the dollar index. So the dollar index is selling, as we have just seen. We'd expect GBP USD to be buying. So this is selling aggressively. You expect this to be buying aggressively as well. So they're inversely correlated. So what can we see here? First and foremost, we can see we did have these highs that were taken out. This was like a major area. From what you can see here, prices would come and take it out, leaving us with an area of interest, something like this, for future use. Let's have that there. So you can have that area out there like that. It's an area of interest that we'd love to see in future. It's on a daily time frame, right? But when you look at where price currently is, price is attempting another breakout to the upside. So we'd love to see price break out of this area, and then probably we shall pay attention to this. Before price breaks out or closes above this high, we remain, we just wait for this area. This remains our area of interest. But if price breaks above and closes this, that means we have given another new structure that it may want to use to continue the move to the upside. That will become our area. So what we want to see is a candlestick closure above this particular high. Then we'll have a certain area of interest. So we'll anticipate probably price will buy to the upside, then push to the downside. But that's on a higher time frame or long-term perspective. Going forward through the week, this is something we can definitely look at in simple terms. So this on a daily time frame, so it's still a bigger, broader picture. Coming down to lower time frames now. I don't think this changes much. We still have something pretty similar or pretty much the same. We are still very, very bullish. We'd expect some retracements, of course, going forward. But from what we can see right now is that we have a resistance level that we'd really love to break above. So when you look at this idea, we have no basic supply level. We have no bearish engulfing or a basic supply level. So we're looking just at the support and resistance areas that the market has availed in these particular areas. So what we would love to see is a breakout of this area and probably a retracement to the downside. So when price retraces later on, what we'd want to pay attention to is a lower time frame area or demand level that led to the breakout. But that's after price closes above this high here. We would like price to violate the whole of this supply level here. That would be a very beautiful thing to watch. So if price closes above that, we can now go to a 30-minute time frame and see what demand level will be responsible for the breakout. So when you come down here, I think you can see that demand level has been formed. So all we're waiting for is probably a breakout above those highs. But as far as the demand level, it has already been formed. So if you see price close above these areas, then you can expect that retracement. So we'd love it to close probably around here. Then we can see retracement to these demand levels here. Then from there, price can continue pushing to the upside as well. So it's something we'd really love to watch in some time going forward. So when you look at this carefully, it tends to try and align with our USD dollar index, where I would love to see a push to the upside over here, then a push to the downside. You know, when this pushes to the upside, GBP USD will push to the downside. So it's something that's a bit correlated. You can see the movements, even if they're inversely correlated, they try to align with each other as well. So this is an outlook we really love to see going forward into today's price action and today's market movements as well. So the other pair we tend to look at is definitely going to be Euro USD or the European dollar and the dollar index. Look at it from this side. Okay. Oh yes, good morning, Maureen. Good morning, Simon and Chimbo. So in case you guys have any questions or any pairs you'd like me to look at later as we end the session, when we are ending that session right now, you can kindly put them in the comment section. Then I'll see how to go about them as well. So same thing with GPUSD this side. We can see it's pretty bullish, very bullish on the daily, weekly as well. Bullish, free range. I think from last week we did see that breakout to the upside as we had anticipated. You had marked out the high demand level responsible for the breakout, and price pushes all the way to the upside. So these are the levels we're watching from last week. We had the demand level, we had the breakouts, and price continues pushing to the upside, and it doesn't quite disappoint. So let's look at now lower time frames and see what outlooks we can get in terms of opportunities as well. Similarly to GBP USD, we can see this pair is kind of prepared for a pullback or a retracement move. We had a breakout from here, nice beautiful breakout as well. And you can see price is trying to continue pushing to the upside. So I would really love it to retrace back into these areas. But remember, this is for our time frame. This would be the best possible area to look for buy areas. And usually when you have these best possible areas, it's not always a must that price must come to these areas. No. When there's a breakout like this on a high time frame like the 4-hour, sometimes what price will do, let's go to the 30-minute, it will go to a lower time frame and either look for the most recent demand levels or the demand level are nearest to the breakout. When you look at this, we have a breakout here, then we have these demand levels here. You see that? We have the demand levels or order blocks here, and price does exactly that. It comes to these areas in order to try and continue pushing to the upside. So on this side, it will want to look like the retracement is a bit done. So what we would love to see going forward, if you're looking for opportunities from here, because then you definitely missed the trade here at the apex of this move or at the extreme of the move. So what you would want to do is I'll probably look for continuation. So you're going to look at continuation areas or how you expect the daily profile to play out so that you can be able to at least get a few pips out of the market at that particular time. So what tends to happen here is that we're going to look for lower time frame areas, resistance support areas, or order blocks that price can easily use to give us a good move to the upside. So price didn't quite consume the whole of this area here, just tapped barely into it. So that means there is still a chance that price can come lower. So it's not a very high probability chance, but price can still come lower into this demand level here, and then later on push to the upside. This is a very big possibility that price can actually use at the same time. On the other hand, we have a resistance level that price has offered us right around here. So you can see these kinds of rejections. There are a lot of rejections. This is always a good sign in simple terms. So what you want to say on this other hand is that price will break out of this level, retest, then push to the upside in terms of this. So you realize all these correlations are actually aligning, GBP USD, Euro USD, and the dollar index as well. They are all giving us a similar idea when it comes to today's market anticipations. So you can see momentum coming in. We'll have a breakout and closure above this area, then a retracement, and price can push to the upside. Or worst case scenario, the supply level here holds price. It comes down into this area, then later on buys to the upside. So these are outlooks you can have as we're anticipating the market movements today. Once again, I would love to remind you that everything offered here is not financial advice. We kindly just give you market insights that you can be able to use and supplement on your trading styles as well, to be able to see if you can be able to improve your analysis, or probably look for some opportunities here and there based on the insights shared. And of course, a disclaimer: trading is highly risky, just in case. So we're done with the dollar pairs as of now: Euro USD, GBP USD, and the dollar index we looked at as well. I know somebody's out there waiting for gold. We're definitely going to come to gold. All right, then the other pairs, just drop them in the comment section. We'll look at them as we go further. All right, so let's look at another pair. Let's move a bit into the Japanese side and look at the JPY pairs. What pairs should we start with? So I'm going to be looking at particularly JPY and NZD-JPY. So let's start with, I don't have JPY here. Let me start with the NZD-JPY pair. So now, wow, this was nice. So coming into our NZD-JPY, this was our analysis from last week. For those of you that were in last week's sessions, I hope this was amazing. So our target was up over this side here. We haven't yet quite got into it yet, but I think there were some good opportunities that the market did offer last week. And these were the zones we had. We did have a demand level here that wanted price to come back to. Price came back to it very, very beautifully. So it was a very amazing trade over here. Price came to the level, respected it, give a breakout, came back into the new demand levels formed, tried to break out, began consolidating. So that overall take profit price didn't quite get to it, but I guess that's okay as long as you're able to scoop out something out of the market. This definitely would have been about how many pips would this be to the high here? Yeah, for a pair like this, about 66 pips in about 12 hours would have been a good trade intraday for a pair like NZD-JPY. A lot of people value pair. Very amazing trades. So let's see what the new week has to offer for us on this side. So this is the daily. So our weekly is bullish, but you failed to get a candlestick closure above this week's. So what we would love to do is probably go to the daily and see which of the higher time frames definitely gives us a beautiful structure. So usually what happens with my high time frames personally, I will look at monthly, weekly, daily. So when I'm looking at these three higher time frames, I'm looking particularly for the one that gives me the most relatable market structure. If I don't find any, then most cases I'm most likely going to be out of that pair. Most of the time I will be out of that pair. When I'm going to scalp, then I can look at the 4-hour. That's the time when I'm looking for scalps at 20, 30, 10, 20, 30, 15, 20, 30 pips, averagely something like that. So now I'm going to look at a 4-hour time frame. So when I'm looking at the structures on our daily here and the weekly, I don't really love the structures I'm seeing. they don't look amazing to me. So I'm going to go down and see if there can be some scalping opportunities, or what they call a typical intraday opportunities as well. So the thing with lower time frames in most cases is that you can't fail to have a trade. You just need to be sure that you're getting the best possible trade, or you confluence as much as you can. So when you look at this, we do have a beautiful trend line over there, but I think this won't be a nice one. So let's do this. Let's have it from these lows over here. Yeah, that will be make much more sense. Yeah, that will make much more sense on my side as far as I can see. Why I'm choosing this particular, because this was a low price formed, and price comes and takes out this high, meaning price gave us a shift, right? It gave us a kind of shift from here, give us a shift from there, then it came here, not so bad as long as I have a shift here, and price gave us demand levels. So for those that have seen a lot of the sessions and heard me speak about inside formations, this is what that inside formation looks like and what it typically would mean. For those of you who have been to our classes, you know what inside formations definitely mean and why they're of high significance. As we get time, we shall be looking at them and how best we can be able to capitalize on inside formations as well. So it's that price comes into this demand level. After shifting from here, we have a trend line. Price has been hovering slightly above this. So even if price breaks below this area, I think I would still remain pretty. Let's look at this. I'll still remain pretty bullish going forward this week. May not be today, but I'll still remain bullish. I'll look for bullish opportunities going further. Why? When I look on the left-hand side, I see another shift. And I see internal structures. Here, we're just watching internal structures. So I can see a breakout at this particular level here. And of course, from here, and I see price came to consume it, didn't quite consume the whole of it. It's a tricky one, but then what happens? We have a demand level that is definitely fresh. This is an engulfing area, and this is our candlestick that engulfs, still fresh. So of course, price, I would look for price to push all the way down there and give me a confirmation. So guys, I'll say this time and again, one thing you really want to pay attention to is going to be having a confirmation. For those of you who have been in some of the classes I've hosted, I've given you multiple ways of looking for confirmations. It could be a price action confirmation. Price action means you're looking for probably a structure, candlestick pattern, or chart pattern on a confirmation time frame. You could be using an indicator. Personally, once in a while, I love using the RSI when it comes to confirmations. And usually, confirmations is the last step of doing everything. You might be a good analyst, you might be good at predicting where the market is most likely going to go. But if you don't have that last touch, that adding touch, where you're adding the small spices onto the whole meal, then trust me, you're going to mess up everything. And that's the biggest challenge that people are facing right now. Many guys, many of you out here are very good at doing analysis, but you cannot trade because when it comes to confirming the trade, you guys are really bad at it. And when that is the problem, then you're going to have difficulty. You may have a very good concept, very good strategy, but you don't know how to execute. You don't know how to confirm your trades. So usually one of the tricks I give guys is the 3-pillar trick. The first pillar is knowing where price is going to, or having an anticipation. Could be a bias, directional bias as many people call it. The second anticipation would be knowing how price is most likely going to get to that objective. Your objective is, let's say, bullish, right? If price is bullish, what is price going to do? Is it going to break out, retest, then continue? Or is it going to first give me a low, then break, continue to the upside? There are always two ways price goes to achieve. If price is going to the upside, it will either go down, then continue to the upside, or it will break out, retest, and continue to the upside. You have a how factor. Then now the third part or the final part is the when. Many people, especially from some modern concepts that we are seeing lately, tend to attribute that I factor of when to trading in a time zone. I know price is bullish, so I'm going to buy in the London, I'm going to buy in the New York. That would have been the case, but your buy should not be based on because you want to buy in the New York. The New York should be a guiding factor to when you will look for the confirmation. So that confirmation in the New York will give you the when. When I go into the New York session, I want to buy, but what am I going to look for? I've seen where price is going to, how price is most likely going to get there, and I've probably figured it's in the London session, New York session where this may most likely play out. So I'll go in that session. I'm looking for a confirmation that gives me when price is now ready to move. So I have a three-tier list. How, also where price is going to, and I attribute that to my first time frame. So why you guys, if you've noticed how I do my analysis, I'm always using a minimum of 3 time frames in most cases. So I'll look for a foundation time frame, usually either monthly, weekly, or the daily. It's one of the three. Then I'll look for an intermediate time frame, giving me how price is most likely going to go there. So when I go to my second time frame, I'm looking for areas of interest. In simple terms, either price will break out of this area, then retest and continue, or price is going to come down or up to this area, then use it to go down to the from a lower low or from a higher high. Then on the third time frame is where now I come down and start looking for confirmation trades. So it's a 3 tier thing, and every tier has a time frame attribute to it to have a minimum of 3 time frames. So when you align time frames, it becomes easier to do certain things. So here, as you can see, from this side, we had these levels here. I had a breakout on the daily, pretty much had this breakout here on a daily. So usually it's hard to see on the candlesticks when they're forming like this because of the wicks, but you can see this here. So you have two breakouts, and when you have two breakouts, what you pay attention to is the momentum of the retracement. When the retracement is very, very volatile, or it has high momentum like this, most likely you want to risk on the extreme. When I look at my line chart, I have a QM level right about here, which for me is a very good entry module that I can always look out. Of course, I won't have to refine it to a third time frame as a must. So when I come to a 4-hour time frame, so it still aligns with my demand level over here that you can see. It aligns with the demand level, which is a beautiful thing. So here, many guys can have very many concepts. Some guys will tell you about sell side liquidity, relatively equal lows, relatively this, and that. They will mark this as liquidity or an inducement or whatsoever. So for price to take it out, then push the upside. So you're going to refine to a third time frame, and then we try to see if there is an area we can refine and reduce our risk exposure on this particular trade. So when I come around here, what am I going to look at? I'm going to see that price left me with this demand level here. That is a beautiful demand level. So having marked it, I won't enter plainly on a demand level because I've marked it. Of course, I'll wait for price to come to it, then probably give me a confirmation on a lower time frame. Then I'm able to capitalize on some market opportunities around that particularly. So coming forward now, we want to see what other possible ways can price definitely try to achieve those objectives. So one of them is going to be over here. So it wicked below, probably do something like picking liquidity, and then it tries to push to the upside. Now to the upside, how far do you think it can go? We have a supply level over here that we would love to see hold price. So these are areas where you're going to look for confirmations, and always the confirmations will be easy. Either price comes here, sells, of course, after a confirmation, probably in a 5-minute time frame or a correlating time frame, or price will come here, break out, retest, and then buy to the upside. That's very okay. That case scenario, price breaks out, retests, pushes to our best buying area that we have just marked out a few minutes below, which is this over here. So these are things that you like to watch out as the market goes into this through the day as well. So these are areas we're going to watch out through the day and see how best we can be able to capitalize on some opportunities around as well. So you can see rejections here strong. And don't forget at 5 p.m. we do have our trading news as well. We have the news coming up. We have the ISM manufacturing. So you want to be aware of what times you're going to be looking for your entries. For guys who trade the New York session, preferably would love price to come to this area, then you can buy from this particular area as well. So that area I would really love to watch coming into the rest of the day. So all right, so let's move on to another pair. We said we look at GPJPY as well, and so what you can anticipate going into the market as well. All right, so looking at GPJPY, let's look at the daily time frame. What do we have? So we've had a breakout from this area here. We have a breakout at the downside, and probably breakout will lead us into an area below here. We do have an extreme demand level that we can probably watch, price probably target as well. So we have this area, could be an area price would want to push to. but would like to see price have a closure below this level, of course, in order for it to push all the way to the downside. So in the meantime, this is our daily time frame, so it will be a long time perspective. So in the meantime, what you're going to do, we're going to drop down and look for the intraday areas that you can be able to watch out as the day goes by. So in case price happens to close there, it's on a 4-hour time frame, which is probably nice. So in case price closes below here, we would love to see a retracement to the supply level here, where we can be able to look for opportunities as well. So this would be the area we would love to watch price come back to, but we'd really love to see it close below this area and take out these lows as well. Then you can probably see a retracement pushing into that 4-hour supply level. Then you can probably push all the way to this demand level that we have over here. We can be able to refine these demand levels, probably something like this. So we have a 2 candlestick engulfing pattern here, still works as a demand level. So this is something we really love to watch out for as well. Then from there, we can probably look for confirmations to see if we can have a buy to the upside and continue that trend. Because as if you look at the daily time frame, GPJPY has been on a very big rally, and I think for the past month we have been looking a lot at these demand levels that have been holding price. We have been able to mention these areas live here, and then we have been able to take some of them as well. So I hope you guys have been able to capitalize on most of those. So GPJPY still bullish unless otherwise, unless sentiment shifts, but we are still pretty bullish on that. This is something we really love to see coming into today's price action as well. So on the other hand, that's GPJPY. So I think the analysis is not so far from what we are looking at on this side, except for this side, we do have this resistance that would probably push price up, then down to this area. So you can see a similarity in NZDJPY and GPJPY. There's some seeming kind of correlation as well on those two currency pairs. So on the other hand, let's look at what else. We have to look at gold as well. Then we shall look at an index. Then I'll look at the pairs that you guys would like me to look at as well. So this is DXY. Interesting. This is a daily time frame. So this is gold. This is gold on a daily time frame. So when you look at gold clearly, we do see that we had a demand level. When you look at this area here, I want you to look at this breakout clearly. There was a breakout here, there was another breakout. So this breakout becomes the most fresh. Why? Because it took out a low, then took out a high, then price retraced and pushed to the upside. So usually there's what they call a 50% rule. When price gives a demand level, you want it to consume at least 50% of the demand level. If price doesn't consume 50% of the demand level, price is most likely going to come back and consume the rest of the area, especially in pairs like gold. But as we've all seen, our gold has been dropping for quite some time. Even in times of the Iran-Israel conflict, we did see our gold giving us all these drops. This was during the time of the Iran-Israel conflict. And people are surprised why there's a geopolitical tension and gold was dropping. It's because no American facilities were under pressure and investors had no reason to invest in a safe haven currency at that time. So that's why we saw that happening a lot. So we're able to come into this long week rejection. If you're able to refine it, we can get some good levels. I think there was a very good demand level on the 30-minute time frame that I was able to outsource yesterday as well. Visible on the 1 hour here. There was this demand level, extreme demand level. You realize that all the other demand levels that were present here, price had actually already consumed them, and that was the only one that price had not yet consumed. So price came back into it beautifully and then pushed to the upside. So that was what happened from last week's analysis as well. Now going into today's analysis, what do we see? We see that gold is really in a rally, and you all know that usually when gold is on a rally of this nature, sometimes it can go for a very long time. So looking at this, we do have a trend line over here that would really love to see if it can offer us some kind of push to the downside, because we do have a very big range to the downside as well. But then we really love to move with this momentum as well. We have a demand level below here that price may take its beautiful time to come back to. So let's go to a 30-minute time frame and see intraday opportunities, because the higher time frames are really so fixated to one direction. They're all just giving us entirely bullish signs as well. So we're going to look at areas where you can expect retracements, particularly try and give us some kind of retracements as well. So when you look at the extreme highs here, we have this the highest point we would love to see price violate in order for it to entirely flip back to the bullish side. Within these areas, you can look for some retracement opportunities that may be bearish. We do have a liquidity engineering level here as well. So at this level, what we'd love to see is a price come to here, give us some confirmation, and now start giving us some retracements. These will be intraday trades entirely. We're now looking for areas that could push us back to this demand level here that price gave us on a 30-minute time frame. Sorry about that. Or this BTC. So we want to be seeing our trades that are areas that would probably push price to give us some kind of retracement to this area here. So that would be something we really want to watch out for going forward into today's gold trade. It's very, very bullish. This one now on the 30-minute time frame, we'd love to see probably a push into that area. Let me get rid of the trend line. Then we can see price probably push to this area. Remember, all these areas will require you to take a confirmation as well. And remember, this is not financial advice. These are just live market analysis that you can be able to use to incorporate into your trading if you wish as well, or to learn a thing or two from there. So we'd love to see a price probably use these areas, give us a retracement to this area, then we can later on try to see if we can continue that move to break above those highs and see if gold can continue that rally it has been on for quite a while, probably half a year already, and gold has been rallying like crazy as well. So this outlook we really love to see on gold today as well. So it's something we really want to watch intraday. We can see lots of momentum coming in towards these areas, which is a good sign. We just need some more lots of momentum into these areas, then we can see a push to this area to the demand level below as well. That would be something nice to watch out for. All right, so on the other hand, we can now look at NASDAQ or the US 100. So we have still been pretty bullish from last week's analysis as anticipated. We had a breakout from here and we said probably price going to continue being bullish for quite some time, and as we can see, it has been the case going into today's new price action. Since the daily is already bullish, won't waste time trying to analyze anything there. The bull move is very solid. We can now come to our 4-hour time frame and see what areas we can be able to watch out. So you can look at this demand level here, where that bearish engulfing that took out a couple of lows, which is a good sign, meaning kind of like a strong low. So it becomes a proper demand level, but we can set price already try to consume it. But remember, we have a 50% rule. We really love to see if price can consume at least 50% of any given area here. So if I have my fib tool around there, my 50% level would be around here. So this basically means that since price has failed to close above this high, we can definitely look for a deep retracement that price can have to this discount levels here. Then price can relatively push to the upside and continue the bullish move. So usually the bullish move last week was courtesy of the Iran-Israel war. As we all know, when wars are going on, military guys are making the most money. Guys who make military equipment, you're making a bomb, you're making a jet fighter, you're making bullets, you're definitely making more money. And with these current wars in the modern times, one of the things selling the most is military AI. So, of course, with military AI being on the rise from last week's Iran-Israel conflict that lasted 2 weeks, we expected to see uh, a big pump on our tech stocks, particularly our military tech stocks. As you can see, the NASDAQ did not disappoint. It definitely had that push all the way to the upside, courtesy of the Iran-Israel war. Right now, the war has cooled down, so we wouldn't expect this pair to really drop that much because the levels it's in are record levels right now. We'd expect NASDAQ to continue pushing because definitely AI would have recovered, and so will the tech industry in most cases, definitely from the profits that will come out. Unless we see any bad sales reports coming in or earnings reports coming in the tech world, we may be on a bullish trend with NASDAQ for quite some time as well. So these are areas we want to watch out for. So just to refine the areas that we are going to look at. So usually I use the third time frame to refine. Then I'll use a fourth time frame for confirmation. So usually when you see me come into a 30-minute time frame, I'm definitely trying to refine my areas of interest. I'm usually trying to refine my areas of interest. Then when price gets to those areas, I'll drop to a third time frame, a fourth time frame, sorry, where I'll tend to take my confirmations from. So if it's a 30-minute time frame and it's my third time frame, daily H4, daily H430, then I'll go to a 5-minute time frame when time for confirmation actually comes, and that's where I'll be able to take my confirmation. All right, so that's where I would love to watch price come to. So just in case there is this demand level here, it's not the best buying area, but has a gap up, and it being inside that area of interest, okay, within our area of interest, an area you'd love to watch out for. It's not a high probability area, but you can still always watch out within these areas. Remember, I mentioned something called an inside formation earlier, so that's how they tend to play out, because they just appear somewhere like that, and sometimes they tend to have some very good market reactions as well. So that's an area you'd want to watch out just for precaution. This is the best buying area. The apex is always the best buying area, and these are information. Sometimes they can hold price. So sometimes what this area will do is to slightly give you a retracement to the upside, and many posts sometimes will take this and think they have taken the golden move, but price does something like this, then it inverts, then it consequently continues pushing to the downside as well to complete its move into the demand level. Sometimes these areas offer this kind of reactions or those kinds of price movements as well. So all right, we have had that. This is on US 100. So we have seen gold as well. So I think right about now, if you have any questions, any pairs you'd love me to look at, if you're on YouTube, if you're on X, if you're on LinkedIn, you can kindly drop your questions in the comment section. Then I'll be able to see what we can do with them at this juncture. If you have pairs you'd love us to watch out in about 2-3 pairs, then we can call it a day. So I'll look at 2 pairs particularly from the comment sections as well. You can drop it on YouTube as well, X or LinkedIn, wherever you're watching from. Then you can look at look at BTC USD. Nice one. Let's look at BTC USD. All right, so wow, it has been a tricky one. So this is from our analysis last week. So what did we see? We had this bigger trend line up to the upside. All right, so we had this price move at almost to this area here. We had this resistance level, didn't quite offer us any good trades on Bitcoin, but price had to give us a consolidation around this area. Now it's pushing to the downside, which is a good sign. So we have a very big range to the downside that you can see Bitcoin come back towards. So we'll look at this, whether breakout retests. All right, so this is on our H4 time frame. Let me just get rid of these. So you can have a clear analysis on this Bitcoin pair. I'm only going to just borrow back that trend line. So we can have this. Okay, that's the second touch, just 1, 2. Okay, third touch can still count for that. So look at our 4-hour time frame. Allow me to zoom this in. Looking at our 4-hour time frame on Bitcoin, we have seen some kind of market structure shift over here. That's our shift point. Our shift point must have a BMS on the left hand side, which was this. A breakout to the upside and then a shift to the downside. And what do you notice here? Price is giving us a demand level that's responsible for that breakout, most definitely. But I love to see this on a second time frame. So we shall go to the M30, which is our second time frame, and we still want to see what demand levels are available at that breakout level. So when you look clearly here, these demand levels here have probably been consumed. You can just see price comes back weeks into themselves. They just keep consuming each other, which means those areas are now a no-go zone, a no-go zone. So right around here, what do we see here? We are going to set price gives us some kind of structures that give us some kind of fresh demand level. So this is the area I would want to see price come back to when it retraces in future probably, and then pushes to the downside. This one at M30 as well. That's an area you really want to watch out for going forward on Bitcoin or BTC USD. On the other hand, let's look at the bottom here and see. When you look on the left hand side here, we don't really have any major areas where I would expect price to probably give us any kind of retracements. So pretty much price breaks out, retraces, and breaks below, then pushes us probably some good moves to the downside, because we do have some kind of almost free ranges. The area I would want to target would probably be somewhere around here. When you look at your H4, price barely just tapped into it for a second or two before it pushes the downside. So my BTC analysis would be entirely that. I would really love to see a push back to the upside and a push to the downside. Where it would change a little bit would be if price breaks out of this area here and closes below. When price breaks out and closes below that area, then we are going to shift our demand level to somewhere around here to this, because of course it will become your new demand level. But that's only if this candlestick that we are seeing right now closes below this area as well. So that's what I'm looking at on Bitcoin. So what I'm looking at on Bitcoin. So I'll love to look at and one more currency, one more pair from the comment section. Then we can, I'll definitely call it a day. As so USD JPY. So looking at USD JPY, where is it? Also right here. All right. So nice. It was very nice. So coming from our last week analysis, we did have these levels here. We expected price to push from this supply level, and it did that perfectly well. We had this level marking our possible entry area, and we see it pushed all the way to the downside. This was so nice. So right now we have a breakout. Okay, we're looking for a breakout at these bottom levels that we'd love to see. And of course, if we happen to see that breakout, we can see the supply level that's most definitely responsible for that breakout, which will be this over here. It will be an area I really love to watch out for, and probably to push price all the way down as well. So this would be an area we really want to watch out on USD So it's still pretty bearish, which shows you how badly the dollar is doing. So USD is so correlated to DXY, because of course you can just see that the dollar index has more how should I say, more significance than the JPY basket or the JPY index as well. So if the DXY is really doing so badly, expect this to equally do badly. So this is what we shall be seeing, probably a close below, a retracement into this area, push the downside. We can refine that supply level. We can definitely be able to refine the supply level. This is the breakout area here, as you can see this. So we shall look for that as supply level that's a response for that breakout. And this is one of the ways we typically do our refinements. It's one of the best possible ways to do our refinements. We can have this in over here. So after retracement, push to the downside from there onwards. So in the meantime, I would love to remind everyone that FX Pesa does offer free trading classes, both online and in our physical locations in Kenya and Tanzania and Uganda. You can come by the office and sign up for those classes. The links are in the bio. Do not forget, for those who are new into the markets and you want to do some practice, do not forget to open your free trading account, a free demo account that you can use to practice your skill that you're getting from the various classes we offer and the various things. We also do have very many other seminars that come up. I would like to thank everyone from Tanzania who came through for the masterclass, and those in Uganda that came through for the financial literacy event that we did have last week. Other than that, there's a lot of content coming out for you guys. Don't forget to check the YouTube channel in the playlist section and look at those different strategies and concepts that can be able to help you elevate your trading at the same time. What else can I tell you? Don't forget to watch the Bullish Banter. Very many episodes coming up, very amazing stories that can probably help you in your trading journey or to overcome some hurdles that you're having in your trading career. Other than that, don't forget to subscribe, like, share. Tomorrow morning, we shall be back on a market snapshot. Rufus will be taking you through as well. Other than that, have a nice day, everyone. See you next time.